Good morning and welcome back to the Opportunistic Trader for November 6th and Election Day. Everybody's out voting early. It's exciting out there. It should be a very interesting day. Yesterday was another interesting one. Big divergences between the indexes. Dow up 200, S&P up like 12, and NASDAQ, down 30. It looked a lot worse during the beginning of the day yesterday, but they saved them. I'm very interested in hearing everybody's thoughts on the election and what it means because, I'm not exactly sure. We were contacted, or I was contacted yesterday again by two or three news agencies wanting to understand what each thing means, and can you be on the phone with us tomorrow night? It's going to get crazy. I'm not really expecting that. Somehow they priced in a loss of at least one, and they're saying if they lose one, it's good. I don't know how it's good, because it was good when he had total control and could do whatever he wants, but now he's not going to be able to do anything for 2 years, and it's going to basically be gridlock across the board on pretty much all policies if that's the case. And if he loses both, then it's really bad overall. But needless to say, nobody knows what those results are going to be. Market, is found stability at $125 or $120 higher than the low, and volatility is still above 20, which may be about the election and just tonight having the fact that there's uncertainty, and then if it comes in the way they want, the election will be it'll be pretty much over. Volatility. So we'll see. Oil remains under pressure. It's down like 80 days in a row. Nobody wants to buy it. It's trading around 62 and some change. And it's weird because we were selling it freaking out at $75, having to put on option hedges against back book positions and whatnot. And now the thing is basically 25% lower and no one can buy it. So, I don't know if this is all also part of this election ploy, to, prop the market up and keep oil lower, but I'm not sure. Gold is, towards the higher end of the range, but still, I guess, range bound. And I'm sure Vince, who's joining us, is going to, is talked about that, multiple times.
We won't make too much of a deal about that. If anyone's tuning in from that, I think oil is more interesting to talk about as well as stocks. But
yeah. So right now, markets across the board, the Hang Seng was down small. The Shanghai was down about 1%, and the Nikkei was up. Going across the pond to European stocks, the FTSE is kind of the underperformer today, a little bit. Usually that doesn't happen. DAX is down small. Markets are 6 handles ish lower, and $4 off the low, and about $10 off the high, or so. And I think it's going to basically be a rumor type of day potentially later in the day when they get some fake exit polls that they're not really supposed to give. What's interesting about this election, I think the voter turnout is going to be very, very high, and I think it's already with pre-voting very, very high. So people are out; they're out in force. Polling stations do have lines all over. So, get out and vote and do that, which is obviously important. And, looking at the markets, today is not an expiration day. The straddle is pricing in about $42, which seems high, but for an election day, I actually don't think it's too high. You have the risk of major downside and then the potential risk of major upside. Now, probably both of those things will not happen, but if they do, market could move 70 to 100 handles. So straddle is probably not cheap. Overall, markets look kind of quiet into today. Yesterday was an interesting day. They tattered Apple. We bought it, then we sold it out, and then rebought it a little bit lower, and now we're kind of flat on the trade. Yesterday we were up a little at the end of the day. Think that you can probably own it here for a trade, although it does not look good, and I don't like it longer term. But for a trade, it might not be a bad. So, that being said, we're looking at other ideas. We're going to maybe put some option positions on. I don't know. Maybe I'm off, but I don't know. I don't know what losing one and holding on to one does to the market. I mean, I would think it's negative, but it's probably somehow priced in. So I'm not exactly sure how to play it.
If I can chime in on that, Larry?
Sure.
Yeah. When you think about both parties, the losing one and keeping one, or losing both or keeping both, I'm not saying it's not going to affect the market, because we know it will, whether it's a good reason or a bad reason. But I was saying earlier, and basically, when you look at what the two parties are united on, that is, the Democrats aren't going to, that are on the table, the Democrats aren't going to vote against making permanent the tax cuts that we have. The Democrats aren't going to say no to a middle class tax cut, and the Democrats are going to cheer on any infrastructure spending. So on the things that are on the table right now, that is fiscal ease and monetary tightening, they're actually kind of united on. So
you really think so? I mean, there is no way the tax cut would have happened if they didn't have control. They won that thing by one vote or whatever.
No, I don't disagree with that, but now it's making it permanent, because once it's already out there.
No, I know that. I'm just saying, to get to the, you think they want to make it permanent?
I think they don't have the courage to say no. How's that?
Really?
I don't think they have the courage. This is opinion. It's another person I speak with's opinion as well. But I think, again, this is conjecture, right? It doesn't matter how the markets react. It matters. The markets won't react today to what we're talking about, even if I'm right, what I'm talking about. But I think that on the macro issues, on the three issues that they can be united on, we hate China, or they can't agree on Russia, but we hate China. We agree on infrastructure spending, right? That was Hillary's platform too. And you've already cut taxes. We're not going to undo that, and we're certainly not going to say no to a middle class tax cut. I mean, especially when it's been levied before the election. All I'm saying is that, to your point, how we've been saying midterms matter. They may matter for market direction, for trading purposes, but for fundamental economic purposes, I think those three areas are what are determining our economy for the next 5 years. And I think they're just going to. I think that the gridlock will be more social issues than economic issues. They're going to spend and lower taxes.
Yeah, I mean, I think
but that doesn't mean we won't rally. If every time a GOP senator gets more votes, it doesn't mean we won't rally.
I don't know. I think, listen, maybe I'm off. I just think it's going to be a washout today. I think people are, coming out to show that, but I don't know the races. I'm not that in tune. We probably need like a political analyst on the show today, Mike. Can we grab somebody? We got to get somebody.
Well, I think also just relating to the markets, though, sticking to the markets.
That would be you.
That is not me.
No. Sticking to the markets, though, it seems like the priced in percentages, and obviously everybody's taking this with a grain of salt, being that Hillary Clinton was supposed to win in 2016, according to the polls the day of. But right now they're saying about an 85% chance that the Democrats take the House, and about an 85% chance that the Republicans keep the Senate. So with the $42 straddle here, the idea, I guess, would be if something, if neither of if the Republicans take the House, or keep the House, I should say, that would be a surprise, and that would probably be seen as bullish for equities, that Trump can continue to kind of more easily implement his policy.
But let me just ask you just a quick question. If that's bullish, then why would it be bullish if it's split? So it's bullish if he has control and can get things.
Bullish if it's split. I'm thinking that's what's priced in.
That's everything I'm reading last night while I was on a plane till 3 a.m. in the morning last night, was basically that if it's split, it's bullish.
Well,
Okay?
I'm simply saying at this point, split means is already priced in. So what's
correct?
Maybe this rally that we've had over the past, when I say rally, but the 100-point handle.
But why? But my question, but that's not the question. My question to you guys is this, okay? If a split is bullish, which I don't think it's bullish, because the whole premise of Trump was he's going to get things done. He's the due president and this and that. If that's bullish, okay, now that we're split and he can't get anything done for the next 2 years, why is it also bullish if he can get things done? Which I believe it is bullish that, he'll still have control just because he has control. But once he loses control, I don't know what's so bullish about that. Why is it bullish if his expansion policies can't take hold or anything else that he wants to do over the next 2 years can't be done? Why is that bullish also? That's what I'm saying. I mean, I know it's perceived that way somehow, but I'm not saying that that's so bullish. So for me, I'm looking at two outcomes that are not that bullish. Okay, one obviously a lot less, bullish is, losing both. But if he loses one, I don't know why. Why is that so okay? I mean, I know they love gridlock. Why do they love gridlock? The whole thing was that they wanted a president that could do things, and now we're going to lose that. So, again, it's just perception, but I'm not quite sure.
Why don't I just paraphrase Tracy, who's actually looking up an article that addresses this very point? Aside from the fact that the mainstream media has latched on that the market is discounting a split and that a split is bullish, I understand your point there. How about if we just say this, paraphrasing Tracy, a split is less bullish? You know what I mean?
I think so, but my question is this: if you don't have both, it's the same thing as if you don't have neither. That's all I'm saying. Like, if you don't have neither, you're not getting anything done, and if you don't have both, you're not getting anything done.
I don't want to get a debate with you, but Hillary Clinton ran on infrastructure spending. Trump ran on infrastructure spending. I don't think the Democrats have the heart or nerve to undo tax cuts. So
no, I'm not even looking. Listen, I'm not even looking back. I mean, maybe they do keep it.
No,
maybe
they
don't.
Forward. I'm saying.
But what I'm saying is, looking forward, they're not doing anything else. They're not giving another tax cut. That I can promise you. I mean, that's not happening. Okay. And so my question to you guys is, and if Tracy's listening, I'd love to hear it. What is the difference if he has one or none?
Why don't I just read to you what she just posted, which is from a story she thought was very relevant. Okay? And then you can make up your own mind. The title, Hung Congress is not medium-term positive for risk appetite as Trump stimuli gets less likely. So that would agree with your point. It's not unusual to see equities selling off in the months ahead of midterm elections in the U.S. Roughly 20 days, I'm just giving you some bullet points. Roughly 20 days ahead of the midterm elections, equity started to rebound almost in unison in each of the last 5 midterm elections. This pattern the pattern this year seems to be slightly been out of ordinary. The point I think they're trying to make here, it is doubtful whether the market has fully discounted a hung or split Congress around this time. So the person who wrote this article, this is Nordea or Nordea, they're more in your court saying that to say that the market is that it is bullish to have a split Congress is overstating it. That there's a good chance that at least some of the fiscal policies he wants to implement won't get done. And
but I'm not. I just want to clarify. I'm not saying that. Like, I'm not saying I'm bullish or bearish or I'm reactive to what the market's going to do, but I'm not but I'm just, all I'm stating is I don't really have an opinion on it, but I'm not quite sure what it all means, because to me it doesn't make any sense.
And that's I think this, if you get a chance to read this article, you'll see that this article, I think, answers the questions you're asking yourself, that the mainstream media is overly discounting that a bicameral Congress is bullish for the stock market because it's part of the cheerleading, in my opinion. But
I don't know. I got a call yesterday from a news agency, and they're like, "We're going to be at our desk, all night, we want comments middle of the night, whatever it is. And I'm thinking to myself, this isn't even, I mean, this is big, but it's not a presidential election. I mean, it's kind of in the cards, like you said. I mean, Mike just said it's an 85% chance on both, or an 80% chance.
Right.
That's a pretty high probability, right?
What's their job security that matters? They need to have content because they have jobs.
No, I get that. But what I'm saying is, if it's not really 85% to me is not a surprise.
Right.
A surprise is something like the presidential election. That's a surprise. So I would say today is not a surprise. So my question is, what do we do? The bottom line is it's an interesting thing. And yes, looking at the straddle, it is pricing in a good move, but overall it's not higher.
Larry, are you burning down your house?
Yeah, I am. I can't even tell you guys what I'm doing.
Okay.
Nothing crazy. I'll leave it to your imagination. No one could just decide what was just going on. But anyway, the truth is, for this, I think they're making a bigger deal than what it is, and I think it's pretty much in the market. So we have to figure it out, and we have to see how everything goes. I don't know if you guys have any thoughts, market wise. I'd love to hear it, what you're thinking with the different scenarios. Obviously the double loss would be catastrophic for the markets here, and the bottom line is I don't expect that in any way, but we have to see how everything parses out for the day. Again, lines are pretty long. People are out. I don't know if they're out pro or con, but I don't know if you guys have any thoughts, on. So okay, let's do this. Okay, can you guys hear me? Okay.
Yeah.
Yes.
Okay. He loses both. How much is the market, up or down? Just predictions. No one's held to this. I'm asking for a prediction. He loses both. The Republicans lose both. How much is the market down?
I'm not sure, actually. It's a good question. I agree with your last comment that you just made, that I think this is overblown, and I'm not so sure that this is a huge market mover. I'm actually most interested in looking at yields right now, as a matter of fact, because we're getting back to these levels. We're at 320 in the 10-year. We're at 291 in the 2-year. If you recall, at the beginning of October, that's what everybody started freaking out about, and initially they were blaming on this down leg in the equity markets was on yields and the big move in yields. So quietly, I actually think, sorry to sidestep the question though, if it comes in expectation, if yields start to pick up again, we could maybe see a move like Nat Gas, where Nat Gas was at, broke through $3, got up to 330, hovered around 320, then just exploded over the weekend to 350. If we were to see a big move in yields, that would be interesting to see for the equity markets. But back to your initial question there of, what happens if they both win? I think if the Democrats were to win both, knee-jerk reaction would be risk off, because
Okay.
Larry,
I think we trade down 50 handles knee jerk from there.
Really?
Yeah, and then I think that's probably a scoop from there. I don't think, but
well, I have a totally different opinion. I think that the election isn't the catalyst, like you said, but the bottom line is, okay, the bottom line is that may not be the catalyst, but overall, the market should go back to those lows at some point. Okay, and I don't think it's bullish if he wins 1 out of 2. And again, I don't, listen, I think it will be catastrophic if he loses both. I mean, it's just blatant. I don't think it's going to happen. Like you said, it's 80% the other way, but it's a blatant,
So what do you think happens if the Democrats win both?
I think if they win both, that, we're down 50 minimum.
I just said
and
that.
Then what? Mike, I'm not done.
Oh, okay.
You said then we're going to have a knee-jerk reaction up. And I'm saying the opposite. I say we trade down there, and then I think that we go back down nearer the lows of the move. I don't think that's going to happen. If he wins one out of two, I think it's very, very negative on the market. Okay. The market should get hit. It's not bullish, but I guess they're pricing in that it's okay. So they have the mantra that the markets are okay. So since they're okay, you know, you gotta, you gotta sort of respect what it is. And obviously, if he wins both, which would be shocking, that would be extremely bullish for the market. Extremely, in my mind, extremely. So it'll be interesting to see how everything goes. But overall, they're trying to price in the loss in the market, saying that it's priced in. So, we'll see. We'll see what happens. But again, like you said, it's 80%. Should I go vote? I mean, it's already done. Why am I voting? It's like, there's a big line.
They're saying the weather effect here and there all over the place. People actually turning out. It'll be interesting when you're like you said, you're out right now, but you're going to be back in a little bit. We're going to be talking at about 11. We'll be giving different.
Going to vote, Mike. I'm going to vote.
Different option strategies based off of looking at some of these 1x2s. It'll be interesting to see different put spreads and call spreads that are available based off of all this volatility and opportunity out there.
It's going to be very interesting to see oil, because I think this was a ploy for Trump, getting it down like $17 or whatever crazy number that it's gone down. And once the election is over, he probably, knowing him, he probably made a deal with the Saudis for like a month. He's like, listen, just pump as much as you can, get it down so we're not at 70, and then we'll get it down to like 60, and then we'll let you take it back up. So we'll see. There's a lot of wild cards. I mean, literally, it's interesting. The bond thing that you talk about is very interesting because, yields can go higher here. But if you really think about it, if it's a split, wouldn't that be negative more for the economy or getting things done? And that would really slow things down a bit. I mean, obviously can't slow it down.
You would think so, yes.
It's exploding, but the market doesn't seem that way. So I think, when we look at it, there's a lot of trick trades. You know what I'm saying? So you got to keep an eye on the trick trades. You got to see, how to trade that stuff. And overall, that's sort of, that's sort of what I say.
Back to your crude position, you were just talking about crude for a second. And actually on that, today we're going to be talking with Tracy Schuckert about crude, and then also Mark Fisher's going to be on. Tracy's on at 11, Mark's on at noon, and they'll be talking about natural gas and crude with all that recent volatility. But you're long crude here, and you've been talking about wanting to hold it till post-election. On Friday, the low was just above 62.60. Yesterday, the low was 62.52, and today it's 62.58. And you've had that stop in at 62.49, so that's held for about 3 days. So that seems like a good level there. And right now we've rebounded again from that low overnight of 62.58, and here we are at 63.17. So
yeah, but if you go look at a chart and look at the commodity, it is. I've never seen any. If the stock market ever did this, there'd be a big problem. It's
Yeah, no, I mean we traded. I have the chart here. We traded 77 on October 3rd. And we just traded 62.50 or 62.58 overnight a month later. Big decline there. I'm looking at some of the individual equity names. Amazon's down $10. Nothing's really moving a whole lot. S&P futures are down 6, Nasdaq's down 21. So percentage-wise, they're both down 0.25%. All the FANG names are down about 0.25%. Financials have been trading strong the past few days. I'd say the past 6 or 7 days they've been trading strong, which is interesting. But I think it is going to be, everybody's really waiting for the news. And while we're talking about 85% priced in, I think everybody is still, it's still fresh from the last election, where it was probably about the same thing, about 85% that Hillary would win, and Donald Trump won. So nobody believes these stats. Fully, but that seems to be what's kind of being talked about as priced in. So that'll be kind of the talk for the day, I think. But then the focus will shift, I think, quickly to the FOMC and some other things going on. And that's where it gets back to yields as well. We have the FOMC on Thursday, and they're not expected to hike at all. There's zero chance of that, but they are expected to hike in December. So it'll be interesting to see on Thursday if they mention anything about President Trump's recent talking about the FOMC and interfering with what they're doing. If they have any comments about the recent market volatility, it'll be interesting to talk about. I doubt they're going to come out right and say anything about the president, but any sort of talk of swaying. Right now, that's priced in for one hike in December and two hikes in 2019. So keep an eye on that to see what happens there. Right now, the dollar's creeping a bit lower. Euro's 114.27. The pound's actually been rising. This is about the fifth up day. We're trading below 127. Now we're back to Larry's favorite number of just under 131. Like the yo-yo, Larry. Right back to 131.
That's what it does. It just goes up and down like a yo-yo. It's not going anywhere. I don't know. This Brit exit, it might happen by the time I become a grandfather. Well, hopefully that'll be a long time. But it's like I've never seen anything like it. But overall, feel pretty good. Long oil. I'm thinking we're going to get a big pop in oil after this election. It could come today with lighter inventories or whatever. But I just think a lot of this is a ploy. And now you have, I think, and I don't know if Adam Collins has this. I'm sure he does, but I think it's swinging to everybody short this thing. So, it should be interesting. And overall, market should go up and down. And, there should be some good trading opportunities today. I don't expect much.
Yeah, well, like I said, that's what I think it'll be a lot of people watching their TVs getting ready for tomorrow. When you come in later, we're definitely going to take a look at those option opportunities in the S&P, looking at some different strategies, whether it be 1x2s or different.
I'm voting. I'm going online to vote. So
he's next, and then also Tom McEntee. So the schedule we have also Tom McEntee will be taking a look at option strategies as well, and so that'll be 1:00. So we have Tracy at 11. We have Mark Fisher at 12. We have Tom McEntee at 1, and then Larry will be he's back in the office after he votes, and we'll be with everybody throughout the day.
Absolutely. Any closing thoughts, Vince? Young Vincent?
I don't care about the election on a day-to-day basis trading. I'm just going to trade. I would recommend trading less volume and wider stops. And I think it's a great day for people who are active traders because you will get whips for no apparent reason, and those are opportunities. As to macro opinions, I think if we go Democrat on both House and Senate, that's new lows because QT remains in place, but then you definitely have gridlock. I think if you have split or bicameral House, bicameral Congress, you're going to see bullish, but not as bullish as you think. And I think 85% discounting a split House is, to me, a 15 delta call that you're not going to have that. And I make my living buying 15 to 25 delta options. So that's it. I would just trade around it and be flat at the end of the day. Active traders shouldn't care about the election or headlines. What they should care about the movement and opportunity it gives them. Let the other people get stopped out. We'll make money off of it. Probably a good range trading day, actually.
Hey, Vince, what are your thoughts on gold here? We're $12.35. We're up $3. We've really calmed down, but, election and big catalyst. S&P has a lot priced in terms of $42. What are your thoughts on, quickly, is there a gold catalyst here either way? Do you expect there to be a $20 move either way? I remember election night 2016, there was a huge move in gold, but the dynamics of gold have changed a bit since then.
Events are more and more seen as exit liquidity for people in the market. So if the market were overly long, I would see the event as an opportunity to exit, whether it be good news or bad news. If the market were overly short, as they were but aren't anymore, I would see it as an event for those shorts to cover. We've been seeing shorts covered for the last week. The buying came back last night. And I say this, you may not be interested in gold, but you should be interested in the dollar. Out of Europe, there's more buying coming between midnight and 4 a.m. And that to me says you got a little bit of spec hunting on the election. But I don't think gold is what you want. I don't think gold is what you want to focus on. I'm not dissuading conversation on it. I do think that the dollar is weaker and gold is higher today. I think the election will have a big effect on the dollar, possibly. And if it does have an effect on the dollar, then you're going to have a negative effect on gold. Because I think the election will be bullish for the dollar, although I'm not quite married to the idea. That's basically it. Nothing good to talk about in gold. Nothing exciting to talk about in gold on the micro. Put it that way.
You know what? The one thing I want to just point out, and it's been happening for about a month now, is the underperformance of NASDAQ over S&P. So keep an eye on that. That thing is working pretty well. I think there's more to go. I think these big cap technology stocks are destroyed, and overall, the market seems to be heavy because of that. That's the most overowned. How are you?
I think there are two factors, and I'm interested in if you think there are more or disagree, Larry. I think two factors weighing on NASDAQ versus S&P and Dow are: one, there is a flight to safety, so to speak. Let's go to bigger cap stocks, even though Apple doesn't belong in the FANGs. And the second is this antitrust thing. So I wonder if you think there's anything else, or you think there's a strong factor that's.
No, I think they're taking the outperformance and putting it more in line. I think that the market is vulnerable because of this. Everybody owns these tech. I mean, the pain in Apple has to be unbelievable. I mean, it's the most overowned stock in the world.
So news headlines aside, am I hearing that you're basically saying that over the long term, NASDAQ had been overbought to begin with, and this is actually a healthy correction for those two indices? You know what I mean?
Yeah, I mean, I don't like Apple longer term. I think it's overowned, and people have to get out of it. So it's going to be interesting to see.
As a reminder, on this on your position right now that you're long from about this level here, we're at 201.30.
I'm just looking for a quick pop to get out of it and then move on. Yeah. It's not a position that I want to stay in. It's not a position, that I'm thinking about much, other than just a trade from oversold. It hit lower levels. I wish I would have waited a little bit, but we got back into it. But overall, I mean, this is not a hold for me. Now, obviously, there is an investor base that thinks the stock's always going to go up. But I think a lot of people in the marketplace trade this on leverage, high leverage. I know people who run accounts at large firms that have told me basically their customers buy this like 5-to-1 leverage, So, it's leverage on top of leverage. I think there's a lot of pain out there. If it gets lower, it could get interesting. But, all bets are off until tonight. And, we'll see how everything pans out, and we'll basically be coming to you all day, and I look forward to seeing everyone in the chat, and I'll be back to you guys in about 40 minutes.
All right, Larry's going to go vote. He'll be back in before 10. We'll talk to you guys then.
All right, have a good one.